Section 2 is really looking at those component percentages. One of the things that I did not review at the beginning of the hour here on the layout of your income statement is your component percentages. Component percentages are what allows a business to look at what they're doing to compare to other businesses and industries within their same area to see how they're doing. Okay? For example, if my business is selling calculators, I am not going to have billion-dollar sales in selling calculators. Compared to an auto dealer who sells Lexuses, their sales are going to be higher. Would you agree? Because the cost or the amount of an individual sale is higher than an amount of an individual sale of a calculator. When you switch from total dollars back to your component percentages, it allows you to compare the two to see how each business is doing. There is a set of standards for each business to say what are acceptable component percentages. Okay? Now, when we look at our directions here for 15.2, what we have is a series of tables that we have to go through and analyze what our component percentages is and see if they're acceptable or not. If they are not acceptable, we have to go through and give some type of alternative of what can the business do. What can they do to change their component percentage to get it in an acceptable level? So, right here, the first one we have is the cost of merchandise sold. They are saying that they don't want it to be more than 53%. So they're saying they don't want, of your sales, they don't want your component percentage to be higher than 53%, because if it is, that means then that you are spending too much on the product and you're not getting as much on then your sale. What we will do is we look at the actual income statement, and right here you would put in the actual component percentage. Here you would tell me with a check mark whether or not it's acceptable, yes or no, based on what it relates there. If it is no, it is not acceptable, here you're going to give me an option of what we can do to make it acceptable. There are two things that we can do to make a cost of merchandise sold acceptable. Increase sales or lower the cost of our product. Instead of going with vendor A, I can go with vendor B, and vendor B can give me a better cost. The other thing that businesses can do is they can buy in bulk. Sometimes instead of buying a small amount every month, they will say if you buy one larger amount that you will keep in stock for 3 months, we'll give you a discount because you're buying so much at one time. Those are all options that you can go through that would lower your cost of merchandise sold. So your option is to decrease the value or increase the sale. Now your gross profit on sales is also going to take a look at the same thing. Now we're also going to go through and calculate our net income after federal income taxes. What I would like you to do is please go ahead and save right now your work that you're on, and then please get into 15.2, work together and on your own. 15.2, cost of merchandise sold. When I look at my income statement, my cost of merchandise sold, component percentage, it is 51.9%. That's what I'm going to type in here, 51.9. Is it acceptable, yes or no?
No.
Okay. It says acceptable component percentages is no more than 53. Are we more than 53? We are less. So this is an acceptable one, so I'm going to put a V or a check mark in there. I know it's a V because it says in the very top here, note, a V to indicate a check mark. Gross profit on sales, not less than 47%. So here, when I take a look at gross profit on sales, my actual component percentage is 48.1%. Our gross profit on sales, is it less than 47%? So our acceptable component percentage? It is an acceptable component percentage because it is not less than 47. It is greater than 47. So both of those are going to be acceptable results. I would like you to please put recommended action for each one. Please put in none, because none is needed because they are an acceptable one. Okay? Now, we have to calculate our earning per share. This is a new part. Right here, I'm going to go through and calculate my information. It says my net income after federal income tax. When I look at my income statement, my net income after federal income tax is $62,907.35. I'm going to put that in there. $62,907.35. Now, we are a merchandising business, and our merchandising business is a corporation. We need, in the directions, this is the only spot you are going to find it, in this directions right here. It says Interstate Tires currently has 110,000 shares of outstanding with a market price of $13.75 per share. Calculate the earnings per share and the price earnings ratio. This is new. You need to understand this. Because we are a corporation and we have shares of stock. Before, all we did is we took our net income and we gave it to the one owner because we were a sole proprietorship. Now, we are organized as a corporation. Corporations have stockholders. The net income goes back to our stockholders. How do we calculate how it goes back to it? The first thing that we have to know is based on this formula here is what is our net income? Well, we just calculated it. The next part that we need to know is going to be how many shares of stock are there for our business. They gave that to us in the direction. They told us there are 110,000 shares of stock. They will always give that to you. You're not going to guess. So I need to put that in here as 110,000. What we are doing is we are taking our net income, dividing it by the shares of stock, and that is going to give us our earnings per share. That means that is how much profit would go back to each share of stock. So when I go through and divide that, my earnings per share, we should get 57 cents, correct? So each share of stock is going to get 57 cents. That is what is going to then go back to the stockholders if they declare a dividend. Now our price earnings ratio. We have to take our market price per share, which is given to us in our directions of $13.75. That is how much each person would pay for one share of stock. So most people are going to buy more than one share because if it's $13.75 a share, they're not going to be like, oh, I'd like one share of stock. They usually invest larger amounts of money into the corporation. So the market price for the share of stock is $13.75. Our earnings per share, which we calculated from up above, 57 cents, goes in here. So when I divide those two, our price earnings ratio is 24.1. That is the ratio of your cost to your return on your investment. So your market price per share divide by your earnings per share will give you your price earnings ratio. Now, you will need to complete the application.
What about on your own?
To read page 458 and 458 for sure. you are going to need to give some solutions when your price-earnings ratio is not acceptable. You will have to read. I'm making you read. Because otherwise, if I just show you, you're just going to start guessing. And you will get those questions wrong on the test. Page 458 talks specifically about actions to correct unacceptable component percentages. 458. You do not have to do the on your own part of 15.2. But you are going to need to complete the application problem. And I will go through and turn on some assignments right now.